after another 75 basis point increase from the Fed, making this a 16x increase in interest rates in just 1 year. And then add to this the latest crypto mayhem with FTX and Binance, the headwinds for crypto just keep getting stronger. Now, Cathie Wood and the team at Ark Invest just published their latest monthly analysis, and there were some very interesting insights. And so in this video, we'll be taking a look at the 3 biggest takeaways for this month, including something very interesting has just happened to the US money supply. Then, to help navigate this storm, it is useful to know, have we been through this before? And then to finish, after a long, boring sideways pattern in crypto, big moves are now starting to happen, and see where Cathie believes the prices are going next. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, first up, now the reason we're all in this big financial mess right now is because of the money printing party of 2020. However, something very interesting has just happened to the M2 money supply.
So money now, M2 growth peaked at 27% in mid-2020. And as of September, it was down to 2.6%. It looks like October could be below 2%, maybe 1.5%. And effectively, money is falling. Money, if you look sequentially, is falling. Now, the only time we've had a sustained decline in money on a year-over-year basis, again, we're not negative year-over-year yet, but that's where we're heading, was during the Great Depression. And hold that thought, because I'm going to describe why we're not in the environment that the Fed thinks we are, which is the 70s. We have never seen this. Many people equate what happened during Volcker's years as similar. Volcker was really trying to throttle inflation and raised interest rates from roughly 10% to roughly 20%. That's a twofold increase. With this week's action from the Fed, another 75 basis points, the Fed has taken interest rates up 16-fold in less than a year. Never been done before. And I think we're going to see the fallout during the next year.
And so the main point here is that the Fed decided it was a good idea to expand the money supply at 27% annually. And this one act is why now we have this inflation and falling asset prices problem. Printing money at 27% is the root cause of this major hangover from the historic money printing party of 2020. This is the M2 money supply for the US, and a couple of very interesting things. Now, to put what we've just gone through in perspective, just take a look at how long it took to go from 4 trillion to 8 trillion. So it was around 4 trillion here, and it takes 5, 10, 15, 20 years. And we pretty much did that in about 6 months. So 20 years of money creation happened in just 6 months. Twice. And then second thing to note is this going on right here. So let's just zoom into this section now. So it peaked out about here, but more recently, the money supply is now contracting. And so M2 money supply is now falling. Okay, next up, to try to navigate this storm, it is useful to try to look back and see if this has happened before. And now most people think that this is like the 1970s, when inflation was running rampant. However, Cathie Wood believes there is a closer time period.
So we don't think this is the 70s. What could this be? All right. Looking back in history, there are 2 periods that remind us of what we're going through right now. One is really 1918 through 21. And so that was a period of war, World War I, and the flu, the Spanish flu, which was much more vicious than COVID-19, killed as a percentage of the population, a much greater percentage of the global population. So war and flu, again, sounds familiar. And we were in the middle of one of the greatest innovation booms in history: telephone, electricity, automobile. The Dow Jones Industrial Average from November of 19 to August of 21 went down 46%. Inflation associated with these problems, again, mostly supply chain, I would submit, inflation hit 15 to 25%. It was in that range for a while. Again, that war was longer, the flu was longer. But that inflation, within a year, again, it was a couple of years, that inflation turned down and moved into deflation.
And so the time period that most reminds them of what we're going through today was the 1918 to 1921 period. And eerily, it's almost exactly 100 years from today. It was the final year of World War I, which obviously was a much bigger war than what's going on with Russia-Ukraine. They had Spanish flu, which was insane just how many people died. As a comparison, COVID's now killed around about 5 million people. However, the Spanish flu killed almost 50 million people. And that was when global population was only 2 billion, not the 8 billion of today. Also, it was a time of 3 huge technological innovations with the telephone, cars, and electricity. And inflation was also running super hot, breaking over 20%. And the big lesson from all of this was that it managed to turn around in about 1 year, and then what followed was a period of deflation. And that's probably the next issue that we're all going to have to deal with. Okay, and to finish up, after a long and boring sideways pattern in crypto, Cathie Wood believes a big move in crypto prices is upon us.
Now, the interesting thing about this environment is if you look at crypto, so Bitcoin has been incredibly stable since its June lows. In fact, the volatility, 30-day volatility of Bitcoin has dropped below the 30-day volatility of the S&P and the NASDAQ. And you'll see that in our Bitcoin Monthly. We're publishing it this evening. And there are some very provocative charts in there that are suggesting we're in a bottoming period for Bitcoin. Now, we do have to be careful. We've seen a nice base develop here. And as many of you might remember from our Tesla call in the day, I said, the base, whenever you have a very long base, and in the case of Tesla, it was 5 years. But whenever you have a very long base, something big is going to happen, because that's the bull and the bears dueling each other. In the case of Tesla, our bet was we'd have a big upside breakout, and we did. In the case of Bitcoin, we would expect the same. The base is not nearly as long, and a lot of the on-chain analytics are supporting that point of view.
So after the insane money printing party of 2020, the M2 money supply is now falling. Although most people believe that this time period is most like the Volcker years of the 1980s, Cathie Wood believes it's actually more like the 1920s. And what comes next is after the Fed will overreact again with excessive rate hikes, what will follow will be a period of deflation. And that's probably the next issue we're all going to have to deal with. And after a brief period where Bitcoin was less volatile than the S&P 500, Cathie Wood believed a big breakout to the upside was coming to crypto. However, as we all now know, a big breakout was coming, but to the downside. And now that FTX is on the edge of default, there is likely going to be some big price moves up and down over the coming days and weeks. So make sure to stick to your investment plan and don't make any knee-jerk, fear-based decisions. Now, in the next video, I will cover my personal investing plan to get through this next 6 months. But for now, just to say, if you did enjoy anything in the video, then drop a like and a big thank you to everyone who does. And I'll see you in the next video. Bye for now.